Welcome to the Swing Trading with Cycles channel. We're going to do our update on Amazon today. It is December 20th, and our last video we talked about a great, short opportunity basically at around the $90 strike with a move down, with expecting a move down to about 80. So intrinsic value of $10 per contract easily. I think this thing probably goes even lower as we talked about in the previous video, but nothing goes down in a straight line. So let's review where we are, right? So, and we also talked about the ratio chart, like how is it doing versus its peers. So again, when you think about should I buy a stock, right? I'd say think about like there's almost like a formula. Step one, is it going up or down on the higher time frames? And I think for most people, a monthly chart is probably very sufficient. So simple question. Is it red or green on the month? If it's red, it means it's going lower. It means it's lower than the opening price. So it's lower than where it started the month. That's the definition of going down, right? Versus if it's green, it means it's going up. It's higher than the opening price, and that's good if you want to be long. So we are looking at the monthly chart right now, and it's very, very obvious. This is, a red candle, right? So we're going down on the monthly time frame. And the other question that you want to ask yourself is, are we making higher highs, or are we making higher lows, or are we doing neither? And again, look at the monthly time frame for that. So we're looking at, again, the monthly chart. We're zeroing in here. We're zooming in. And when I say higher high, higher low, or neither, that is always relative to the previous candle. And reminder, right? Candles are just a visual representation of a price range. That's all it is, right? So, and that's important information. What is the range of prices people were willing to pay during one time period versus a different time period? It's important to know that. Because if it's going lower, if the lowest price people are willing to pay for this time period is lower than the lowest price they were willing to pay for the previous, that's bad news, right? And so all that to say, what do you see is happening here, right? Very clearly, we have dropped below the low from November. So we're now below the lowest price that the stock was purchased for in November for this December candle. That's not good news, right? Especially when you have the combination of those two things being red and making a lower low. That is really bad news. That tells you that, again, the stock is going, or the asset is going lower on the monthly time frame. Now, it's possible that it's in, and another way of saying, just to be clear, it means it's in a downtrend on the monthly chart, right? Another way of thinking about that, or I should say the nuance to that, though, is that it's possible that it could be in an uptrend on the daily chart, right? So you could be in a downtrend on the monthly chart, but in an uptrend on the daily chart. So let's see. Or the weekly. It's hard to be on an uptrend on the weekly if you're red on the month, but it's possible. You can see for the daily, if we zoom in there, that's not the case either, right? We're making lower lows, right? And if you're making a lower low on the monthly, then again, it's hard to be in an uptrend on the daily. And just to hammer home the point, these are your lower highs, right? Like each of these swing highs is a lower high, right? We went below this low, we went below that low, and now we're below the low of this candle. So we're making swing highs at lower and lower levels. That is how a downtrend works. Now, how do we use cycles to our advantage to try to think about this? So let's look at the weekly cycle first, right? So as we talked about on our last video, this appears to be basically one cycle, more or less, right? Like from this low here, you rally. How long is that rally? 12 weeks. And then you get a low on week 24, right? So let me actually mark that 12 weeks. And the reality is this is just a guidepost. It's not like something that it's not like it's to help you kind of visually the cycle. That's the idea. And if you're not familiar with cycles, there's a ton of content. Take a look at the links in the description. But all this is telling you is this was a 13-day rally, right? And then we declined for 11 days. So this whole period was 24 days. And I'm just marking swing highs along the way. We can delete these. Now, here's the thing, though. Usually the way a cycle works is you get a low and then you get some kind of rebound. Like for instance, we're not going to mark all of these cycles, but I would say this was a little cycle right here, right? It was really short, which makes sense because the cycle for the QQQ was also really short. And so in this case, this cycle actually failed pretty early and then made a high on week, what is that? 1, 2, 3, 4, 5, 6, 7, week 8, and then declined for another 8 weeks. And more importantly, made a lower low, right? And so we then got a rebound for 12 weeks, and now we're making another lower low. And so you would expect that if we got this weekly cycle low on week 24, that we would have rebounded for at least a few more weeks versus just dropping lower like this. So that raises the possibility that this wasn't your weekly low and you're actually going to get one later. So let's think about this. If this is week 24, if this is still the same weekly cycle that's just still declining from this week 12 low, that is week 25, 26, 27, 28, 29, 30. So we're right about on week 30. So it wouldn't be crazy for us to actually because we've already went below this low. That's why we know that because we're making new monthly lows, which means we're making lows on all time frames. But if you could see a world, and maybe we even get in one more week of down, right? Like something like that. And then it bottoms, right? And maybe, you essentially get a week 31 bottom, and then you get a little rally. And the rally definitely doesn't have to be 12 weeks or this number. Like, there's no like specific rule about how long it needs to last. You just tend to find that, it's in the same principle that price can't drop in a straight line forever. And so at some point you're going to get some little bounce. And so like you imagine you get, something like that, maybe even like that, right? Before you get, a swing high on the weekly chart, right? Like and again, this is by no means a prediction or forecast. This is just kind of a scenario, right? Like you imagine, and these are probably, this is aggressive. This would be an aggressive rally, but that's what you would kind of like just so you can kind of visually see it, right? That's how we might expect it to play out the next weekly cycle. And so it's important to just know like the way markets tend to bottom, the way things tend to work. Like I think this is helpful. The candles not being the proper width notwithstanding, but that's what you would kind of expect. But here's the thing. That's the thing about cycles. There's nothing mystical about them. In this case, price is just really weak. So it's entirely possible that this is your weekly cycle low, and we topped out on week 1, right? We had a weekly cycle for the Qs where we topped out on week 2. So there's no reason why that can't be the case. And so you want to be open to that. You want to be open to both possibilities and continue to watch price. Because again, we could be getting a rebound here, and maybe the rebound actually happens this week, right? And we might see that for the broader market, although the market is in weekly cycle decline as opposed to maybe so you may see a world where Amazon has a little weekly cycle rally, but the market as a whole is actually just moving into a weekly cycle low, and we'll talk about that, or weekly cycle decline, and I have a separate video about that if you're interested. So we'll be watching for this on the daily chart because there are cycles on every time frame. Well, look at that. We're going green for the day. Well, that's interesting. That's important to know about. Okay, so zooming in on the daily, there are cycle lows on all time frames, right? And this was your last daily cycle low, topped out on day 4, so a very left translated cycle. And so if we get really tactical here, we want to think about where are we in the daily cycle? Boom. That tells you something, right? So that's day 28, and we're trying to make a little swing low here, right? And so that tells me that it's very possible we're getting our daily cycle low here. So that is really exciting because that is where the short opportunity sets up, right? So it's all about matter of time frames. Obviously, each person has their own time frames, but oftentimes it makes sense to plan the trade on the daily cycle level, but be aware of what's happening on the weekly cycle. So here's the thing. If we are getting a weekly cycle low, then you would expect that this may be a stronger rally. And so that means this daily cycle may rally for, like, again, this topped out on day 5. This thing could maybe go to like maybe even day 15, something like that, before it rolls over, right? Something like that, right? If you imagine kind of visually. Because if we're getting a weekly cycle low, think about that. If we're getting a weekly cycle low, we would expect that we're gonna rally for at least a few weeks. So that means we're going to rally for several days, right? If you think about, how everything kind of fits together, right? So you expect something kind of like this. You get an early weekly cycle, daily cycle top. So the same way that we're thinking about an early weekly cycle top, in the case that this is a weekly cycle low, we would get an early daily cycle top. That's how it works, right? You get a swing high on one time frame that cascades into the other time frame, the higher time frames. So a daily swing high becomes a weekly swing high. So that's exciting, right? Like, you could see a world where we rebound all the way up to 111 easily. Like, this is your last, just as drawn in this chart, this is your last cluster of swing highs, right? So we need to get past these. So that might be optimistic. So it may be more like something like that, right? Like, yeah, something like that maybe. Because that's going to, like, those swing highs become your resistance. That becomes your, sort of your supply zone, your area where you might anticipate price is going to have some trouble. So that's your daily cycle view. So we'll be watching for that, certainly putting out updates. And if you're not following on Twitter, definitely take a look up for a link in the description, because I'll be giving updates in real time as that happens, as this unfolds, because this is going to be a nice little trade. And as I've said before and in previous videos, when this thing finally bottoms, that's going to be the trade. That's going to be a huge trade. Now, just for context, just for perspective, let's go to the relative chart, at Amazon versus the QQQ in this case. So on the left-hand side, we have just the Amazon chart itself. And on the right-hand side, we have Amazon versus the QQQ, just one divided by the other in TradingView. Very useful feature. So you can see, as I talked about in the previous video, I won't belabor the point. Definitely take a look at that video if you haven't seen it. But we did, wait, I thought that line. So we have a swing high, below. So the low for 2021 was 144. And so once we cross below that, these are your annual charts, right? So every candle is 1 year of price action. Once we cross below that, that gave us a swing high, right? So that makes 2021 a big swing high. That's your absolute chart. But notice the on the ratio chart, we actually topped out in 2020, right? The COVID year. So there's been no reason to own Amazon since 2020, since really 2021, right? When we made that swing high relative to the market, even though Amazon still went on to make a new high in 2021, a slight one. So this was a little bit of a tell in some ways. And if you think about this structurally, this thing is just falling into the abyss. You see a world where it wants to come to like down here, right? Something like that. Right, like right there. And we don't know what that will mean for the price in absolute terms, because this is a ratio chart, obviously. But as we talked about, in absolute terms, it wouldn't be crazy to get a move down to like the mid 50s. Just look at the structure of this chart. Look at the past swing high that happened, right? Look what happened, right? Once we went below the low of that year, yikes, right? That was obviously the .com bubble. And also fair to point out, like, look at this thing that almost became a swing high, and it got saved. We just kept going higher. So doesn't mean we're going to droop down for like the next 2-3 years, but I wouldn't be surprised if we get a candle like this for 2023, right, where it just kind of ends the year that way. So it's helpful to have that big picture perspective as you're thinking about trading this. And again, in absolute terms, it looks like it's not going to be good, right, to own Amazon for a little while, right? Like, you probably get something like that. Again, watching this chart will be a clue as to when you want to kind of jump into Amazon, in addition with the absolute chart as well. And we'll just zoom into the monthly just to kind of give a sense of how that looks, right? So you just see a pronounced downtrend on the ratio chart. You do have these little lower highs, and that happens. That's just a feature of price action, even on ratio charts, right? What that means is you'll have this little time period where Amazon is doing better, right? But then it'll just go back to the downtrend, meaning for this little period, Amazon outperformed. For this little period, it outperformed. But like, look where it's heading, right? So that's going to be important. And it's funny, you look on CNBC, you see people talk about, like, it'll just be interesting to see. You see people make recommendations about things, for instance, and it's like, have you seen the ratio chart? I mean, why on earth would you own this versus the Qs? And let's just look at this versus the S&P 500, just to be fair. And I don't think the picture is much different, right? We'll do this versus SPY. Yeah, same kind of idea, right? Like, it's still, the same exact direction. So we'll be watching that. Again, this is going to be an awesome trade. Again, continue to the downside, and then again, reversing back up, because this company is not going anywhere. It's certainly going to go back to all-time highs at some point. It just might literally take a few years, and we'll be watching it and trying to trade it as it makes sense. So that's all we have for today. We'll leave it at that. Thanks for watching.